Welcome everyone. So we are here today to answer the question, how has financialization transformed the world economy? So first, we start by a definition. So financialization refers to the increase in size and importance of a country's financial sector relative to its overall economy. Financialization has occurred as countries have shifted away from industrial capitalism. This impacts both the macroeconomy and the microeconomy by changing how financial markets are structured and operated, and by influencing corporate behavior and economic policy. So we separate our presentation into three different parts. The first part is about history. So we cannot talk about financialization without talk about capitalism. So the capitalism is basically the offers, demands, and investment on a market. After the World War II, the world economy thrived. Money amounts in the banks, stock exchange, and governments and other institutions grew up fast and strongly. Each of them respected the market rules and laws. So then, in the 17th and moreover during the 18th, we observed a huge development in financial activities in all the world. So during this amount of time, the deregulation of the financial markets started and became quite different of the real economy. So we don't need any more product or market exchange to make money. The financialization was born. So the bank and especially the stock exchange power increased tremendously, and the money only need to circulate like a flow. So then the speculation became a specialization, and the financial sphere was even stronger than the real market, which started a recession. The financial operations dominate the world economy and work by and for itself. And now we are going to see the second part of this presentation.
So first, we're going to see what is financialization and some different periods. Nowadays, international capital flows have increased from 2,000 billion in 1998 to over $4 trillion. Most of this capital is unrelated to financing the real economy. Indeed, of the $4,000 billion are exchanged every day on the capital markets, less than 4% is used for financing of the real economy. For example, world trade and FDIs. The rest is linked to speculation and short-term financial investment operation process, which is inscribed in the history of capitalism and which affects its mode of regulation. The development of capitalism in its industrial phase was based on expansion and diversification of production. During the 30 glorious years, average growth rates per year of 6% in France. Money that is reinvested was to be allocated in large part to productivity investments. That is to say, making it possible to increase production capacities, produce more, or improve them. Real economic activity needed the financial sphere to operate and develop, need for money. For example, financing system, banks, stock exchange, an exchange system between currency, international monetary system, fixed variable parity, etc. of the economy was achieved through the meeting on the market, money, banking, stock exchange, etc. These markets were regulated by the law of supply and demand, but also by the standard of all the institutions, central banks, national and international rules on exchange rates, interest rates, etc. Since 1971, there's the end of the link between the dollar and gold, and especially since the 1980s, we have observed both a strong development of financial activities without this increase being linked to that of the real economy, and to the implementation of the deregulation policies in Great Britain and the United States and Europe. However, the financial logic is fundamentally different from that on the real economy. Capital no longer has to go through the detour of production to grow. Its simple circulation generates the creation of capital additional. Short-term investing is becoming the norm, and it's speculation that increase the value of an asset and therefore the income from that investment. For example, if a capital owner believes that the price of a company will increase, he will buy shares of the company and sell them when their price increases. We see that the speculator is not investor who will bet on the development of the company in the long term. These operations have enriched the holders of capital by generating much higher profits than those who can provide financing and investment for the real economy. This is the reason why movements of capital for purely financial purposes dominate the markets with structure the world economy, stock market, example the CAC 40, bond markets, etc. Now we're going to go to the second part, the causes of development of financial economy through the globe. First, we see an increase in available capital, the external surpluses and deficits. Some countries have accumulated trade surpluses, OPEC member countries, country emerging, China in particular. These locals, all exporting or commodity exporting countries, import for reason of protectionist economic policies in favor of their national companies for different reasons. Some countries like Germany are running surpluses, $217 billion, thanks to a dynamic of exports helped by strong competitiveness. Some other countries are accumulating external deficit, like France also, $52 billion, United States, Canada, India, and a lot of different countries. Then we have the speculation mechanism. In August 71, the United States decided that the dollar's parity will no longer be pegged to the parity of gold. This is the end of the fixed exchange rate regime, the end of the monetization of gold. Gold is no longer a currency, it's a safe haven. The dollar becomes the only international currency whose parity freely fluctuates. There's a law of supply and demand. We speak of the yo-yo of the dollar. Is defended by all countries because all international trade is denominated in dollars. From now on, currency fluctuates freely and therefore favor the possibilities of speculation, the dollar against the euro, the devalued yuan against the dollar and against the euro, etc. Currency fluctuation offer important investment opportunities available to free float capital that goes into or out of a particular currency depending on interest rates. $1 billion and euros travel the world in search of the right investment by anyone. For example, if a speculator thinks that the dollar is going to increase in value, he sells euros and buys dollars. If after bought the dollars, he thinks that the dollars is going to fall again, he sells his dollars. If these two expectations confirm, he pockets profits. For example, today, Europe is stepping in to devalue the euro against the dollar in order to boost competitiveness in each country and growth. Euro and dollars devaluation party explains Rafale sales today and different time of period in the economy. For 30 years in Europe, the free movement of people, goods and capitals ensured in the Treaties 1988 and in the European Constitution in 2005.
So, to conclude, we saw that the financialization is completely detached from the real economy. It generates its own profit, which is very lucrative. It also helps a lot of people to become more and more rich, as well as it creates tremendous gaps between rich and poor. However, financialization is worth only in a liberal and deregulated state. So politics doesn't have any more control on it. It overpasses states' regulation, which have to manage the consequences, like the different economic crises and more or less the world instability. And so the financialization had and still have a huge influence on our society, but we had the right to ask ourselves until when will it continue in this way? So thank you for your attention and goodbye.